The border situation is out of control. By some estimates, we're looking at upwards of 2.1 million apprehensions that are expected there on the border in 2022. It is so bad that not even the Biden administration can sugarcoat this one anymore. The head of Homeland Security reportedly told border agents that the situation is, quote, worse now than ever. Hello, everyone. Welcome to the Trish Regan Show. I am Trish. Good to have you here. We're going to get into this. I also want to talk a little bit about what the Fed is doing and how you can position your investments in this kind of environment. A little later on in the program, I have the president of Key City Capital coming on. We're going to discuss real estate investing. We're going to discuss how you can protect and shelter some of your income so that it grows in this very treacherous environment. But first, let's get back to what's happening with DHS. So according to a report out of Town Hall, this is exactly what he said. Look, it's worse now than it frankly has been in at least 20 years, if not ever. Again, this report coming to us from Town Hall, which exclusively obtained this leaked audio. So someone there in the audience recorded this conversation and leaked the audio to Town Hall, where our head of DHS admitted it's bad. Well, you know what? At least he's like coming forward about that, because these poor Border Patrol agents feel like they don't have the backing of this administration because the administration is trying to pretend like none of this is going on. In fact, the administration helped fly nearly 45,000 border crossers and illegal aliens into the U.S. in the first 10 months of 2021 on domestic commercial flights. The administration, including Mayorkas himself, has actually sat down with the families that are demanding $500,000 apiece per individual for having been separated when they came illegally to this country at the border. Apparently that's not going to happen, so Jen Psaki tells us, but the point is Mayorkas actually went and entertained the idea by sitting down with the families. It's now all come out. And so you can imagine these Border Patrol agents really feel beaten down, especially when the numbers are this bad. In fact, if we look through some of those numbers, we're looking at basically 500,000 people that came here in all of last year. More than 500,000, I should say. And a group called the Princeton Policy Advisors, which accurately predicted those illegal immigration levels last year, is now predicting that we are going to be looking at 2.1 million apprehensions for both calendar year and fiscal year 2022. I mean, this is just outrageous. It's far more than we've ever seen before. And so, what do we do? I mean, as a nation, and look, don't get me wrong. Like I loved it when Trump said that he would roll out the red carpet for people to come here, the right kind of people that we need and we want. And I'm not saying everybody has to have a PhD, for goodness sakes. We need all kinds of people, right? But they have to come here with the right intentions and the ability to be able to, come here and not be a drain on the system. I think that's actually critical. Nobody wants to say that, but there are economic consequences to just saying, okay, come one, come all, and saying, okay, can we write you a check? Here you go. We can't afford that as a nation, especially now with everything that's going on. So this is really important. I'm encouraged that at least, he's admitting to these agents. I don't think he had a choice. According to this Town Hall report as well, one of the agents actually turned his back on the Homeland Security Director there, Mr. Mayorkas, because they're fed up. I get it. They're fed up. So I want to get to what's going on in terms of the economy as well. As I said, we can't afford to be taking in all of these immigrants illegally that, don't necessarily have the ability to take care of themselves, not to mention the criminal aspect to all of this, which is extremely disconcerting. But before I do, I want to quickly remind you, do not forget, you got to tune in tomorrow at 4 o'clock sharp Eastern time. I'm going to be on my locals channel. It's a little community that we're growing. You can come and join for free. Go to trishregan.locals.com. You know how much I believe in our freedom of speech. This is a platform that really embraces that. And I'm going to be taking your questions and your comments and listening and responding all tomorrow live at 4 p.m. Eastern. So go to trishregan.locals.com to sign up. And while I have you here, very quickly, one of the great sponsors of our program, I just want to mention, because this is, especially if you're older, this is an alternative to AARP. This is the conservative alternative to AARP. 2022 is going to be a really critical year. Obviously, we've got elections coming up, so it's a chance for us to really make some changes in Washington, D.C., a very important year. And the Association of Mature American Citizens, with its nearly 2 million members, is doing what it can to influence all of that. They want to stop this out of control spending, which you know and I know, Build Back Better would just be more inflation for our overall economy, thereby making it that much harder for people on fixed income, specifically seniors, to be able to really make ends meet. So AMAC is against that. They want to make sure that Congress doesn't plot to hurt our seniors through more and more spending and more inflation by helping conservatives to get back midterm elections in this battle, really, I should say, for freedom versus socialism. Unlike some of the liberal groups out there, AMAC, like I said, is the conservative alternative, action-oriented, 50-plus organization fighting very hard in Washington and across our nation for seniors. So I urge you right now to choose AMAC. You're going to receive all kinds of great membership benefits, all kinds of travel. I like deals, all kinds of travel deals, restaurant deals, hotel deals, restaurants. As I said, your membership goes not just to that, but to support your values. I mean, think about that, something that really is supporting what you believe in. So go to amac.com, amac.us/Regan. We have the URL there on the handle, on the video. Just take a look at that, amac.us/Regan for your membership and to become an AMAC member now. Also, while I have you, I want to encourage you to go to my store, the Trish Regan store. We get some really cool merch there. And if you're a freedom-loving capitalist like I am, I know you're going to love all the fun stuff that we have there. And finally, one more just thing I need for you to do. It's a new year, and this is really, really important. Before you start investing in the markets, before you start doing anything, the one thing you got to cross off that list is life insurance. It's just critical. It's, to me, the cost of doing business. It's the cost of being alive. If you have anybody that cares about you, my family's protected. I want your family to be protected too. So if you do not have life insurance, listen up. This matters. This is something you got to knock off your to-do list. And you don't want to just go to any company for this. You want to go to selectquote.com, which has been in business for over 35 years and helped millions of people to find really good life insurance policies at huge discounts. In fact, they've helped save people 50% or more by shopping these highly rated insurance carriers. This is what I want to tell you about. Listen to this. SelectQuote found a 40-year-old man with high blood pressure, a 10-year, $500,000 policy for only $19 a month. $19 a month, not bad. It's all very, very affordable. So really, there's no excuse right now for putting this off one more day. You need to do it. Protect your family, protect everything you've worked for. Go to selectquote.com. The quotes are 100% free and takes just minutes, right? So just a few minutes out of your day and you can get this. So do me that favor, just take a few minutes, go and get your free quote at selectquote.com. Full details on sample policy and carrier ratings at selectquote.com/commercials. Price could vary by health, issuing company, and other factors, not available in all states. Anyway, we've got a lot going on right now that causes me to be increasingly concerned about our economy. Inflation is real, 7% and growing. That's on consumer prices. Producer prices are already higher. And so people keep saying, well, when does this stop? How does it stop? And I'm not convinced. I'm not convinced it's going to. Not this year, not next. We have a problem here. Supply chain issues are struggling to get worked out. And given that everybody seems to think there's more and more variants coming our way, I don't know how that starts to let up. And so I wanted to talk to an expert about this, about how you can help protect yourself in this environment. So I want you to listen right now to my interview with the president of Key City Capital. They're thinking about all of this asset protection in a very innovative way, and it's worth listening to. So take a peek. The Federal Reserve is trying to fix this whole inflation problem, which is just skyrocketed out of control. It's communicating that it's going forward with those rate cuts. Come March, apparently. We'll see. I'll believe it when I see it. But anyway, they're talking about a 1/4 point hike, and the expectation is for 4 or 5 of these things. Well, here's the question. Is it going to matter? Is it actually going to change all the inflation that we have right now? Not necessarily, says my next guest. I'm so happy to have with me today Charlie Dombeck. He's the president of Key City Capital. Charlie, welcome to the program.
Thanks, Trish. It's great to be here.
So tell me what you think of this. I mean, the Fed finally, right? Finally getting around to doing something. I've argued for months. They could have done this thing 7 months ago, but they didn't. But now they're finally saying, come March, we're going to probably move on this. They're communicating that to the markets, perhaps to, kind of ease people into this idea, given that we've had such low rates for so long. But even if they do, Charlie, even if they move 4 or 5 times, does it really affect inflation given some of the supply chain issues, et cetera, we have embedded?
I don't think so. It's too little, too late. And if you think about quarter point increases, 4 or 5 of those, so how many points are they going to be able to raise interest rates? I don't think they're going to be able to cool the economy and take money out of the monetary system very effectively with the interest rate increases they've proposed. And history has a way of repeating itself. If you think about the last time that we had inflation at this level, 30 years ago, the markets lost about 20% of their value over a 6-month period of time. And we had interest rates that were in the mid-teens. And in order to really make a difference with interest rate policy, interest rates are going to have to rise much more substantially than what the Fed has proposed.
Mm.
And I did hear that potentially we're looking at maybe a half a point increase at some point on some of these rate increases. Even then, that's not going to be enough. Too little, too late, not going to make much of a difference. We have embedded supply chain issues that haven't let up. They're lasting longer than expected. And I expect supply chain issues to carry all the way through 2022. I don't see it letting up till sometime in maybe the first or second quarter of 2023.
Well, hey, and look, Anthony Fauci keeps telling us there's new variants right around the corner. So if we're constantly in this sort of open up, shut down environment as far as factories go, then that, of course, has a definite effect. Not just factories, but even, workers getting to work right now. There was a grocery store chain in the Southeast that reported they had to hire a bunch of temporary workers. Like 1/3 of the staff was actually out because of Omicron. So all of this, catches up with things. And I'm with you. I don't think at this point in time, higher rates necessarily changes it. I mean, it could affect it on the margin. There's been a ton of money just flushed into the system. But I think fundamentally, we've got something going on that's not really going to shift until maybe we get the technology to catch up with all that. So, long term, that's one thing. But in the here and now, as you said, 2022, I don't see it. I'm with you. I don't see it abating anytime soon. So with that in mind, I mean, the big question, I keep getting back to this because, people, they want to be able to retire someday. They want to be able to save their money. They want to be able to plan accordingly. It's hard when inflation is creeping higher and higher and therefore eating into your savings, eating into your fixed income. I mean, are there ways, what should they be looking at? I mean, I preach diversification. I know your specialty is real estate. Tell me how real estate actually is able to help shield some people from these inflationary concerns.
Yes, wonderful. One of the things that we've been advising clients recently is to take some of the profits off of the table out of the financial markets that they've realized over the last market cycle. And by all measures, we are historically overextended in our financial markets. And I've expected a correction. I think we're just beginning to see volatility in the markets that is going to continue for the foreseeable future. And so we're advising clients to take a very defensive position and to invest capital, take profits off into inflation protected investments. And there are a couple of asset classes that perform exceptionally well in an inflationary environment. One is passive rental real estate. We're seeing shelter inflation. When you have an inflationary environment, rental rates rise and properties continue to cash flow and generate a very good yield.
Mm-hmm.
Interest rate adjusted investments are also good choices like asset-backed lending.
Mm-hmm.
Even in the traditional financial markets, there was a massive inflow into debt-based instruments recently as a protection against inflation. And at Key City Capital, we are a sponsor of workforce, single and multifamily residential real estate, and asset-backed lending investments. And what's unique about our portfolio is everything we own is located south of the Mason-Dixon line, typically in 3 states, Texas, Tennessee, and Florida, which have been jurisdictions that are what I call unintended beneficiaries of the pandemic economy.
Sure. I mean, I think a lot of people have moved out of these urban areas in the Northeast or in the West, right? And they've sought places. You mentioned Texas as one of them, Florida, Mississippi. I mean, they've sought places with less tax penalty, right? Because you can kind of work from anywhere now, and maybe a kind of nicer standard of living. And I think it's a fascinating phenomenon that's going to have long implications as we move forward, and the ability to kind of invest in that, I think, is really exciting. You mentioned rental incomes in Texas and Florida. Like, given that real estate has increased so much, how do you make sure that you're still getting the best value in some of these places? I know you guys have been doing it for a while, so you've got at least the portfolio on your side. But as you look for new acquisitions, what is it
Yes.
that you are most tuned into?
So we look for a couple of things on a property by property basis when making an acquisition. We look for properties that have either not been optimized from a cash flow perspective
Mm-hmm.
or more likely have a significant amount of deferred maintenance. Most of our properties are in the B minus and C plus properties that will go through a value add process. And typically within 12 to 18 months, we can create about a 30% spread on the value of the asset compared to what we paid for it
Wow,
from the acquisition and improvements.
that's
So that's
good.
a significant rate of return that we provide to our clients. And what we're finding in these jurisdictions is we're getting between appreciation and rent growth, double-digit rates of return just on those two factors. So we're very fortunate in these jurisdictions to be able to generate north of a 25% annual return to our investors because of what's happening demographically in our country.
Wow. So tell me, like, just as we think about what your company is doing, effectively an investment firm, so kind of a private equity style investment into real estate. But you're different, I should point out, than say a traditional REIT. Explain that to me.
So we are different as a company. We are what I call a wealth acceleration company where we really focus on two areas in our clients' financial life. I'm a
Hmm.
CPA. I've been a tax planner my entire life. So
Wow.
I help clients recover dollars they unnecessarily pay in the form of federal and state income taxes, and I help them improve investment performance. So
Okay.
that is the big difference. Those two factors control about 80% of the way that you grow your wealth.
Huh. That's, that's an important thing to think about. I'm not suggesting anybody, not give Uncle Sam his due, but simultaneously, as you think about planning your life, little things, big things. I mean, move into a income free state like Texas, like Florida, or even my home state of New Hampshire, where they have no sales tax, no income tax. Somehow that they still manage. It's pretty amazing to do just fine. But that tax planning strategy is so critical because it really does eat up a lot of your money. And if you can think strategically about how to shield some of that income, that matters. I mean, it's meaningful long term, isn't it?
It is. I call it playing tax chess. It's simply moving the pieces on the board in your favor and
Mm-hmm.
using the Internal Revenue Code to your advantage. And what we're able to do is create a lifetime annuity of savings for our clients where we can compound those dollars in an investment program whereby those dollars grow strategically over a career of work. And ultimately, it shortens the time it takes to reach your financial freedom goals, maybe reaching a stage in life that we call pre-retirement, where you have the ability before normal retirement age to have much more flexibility in your life relative to how you spend your time, what you do, whether that's leisure, spending time with family, or enjoying travel, whatever it may be, you have more choice. And everybody wants that in their life,
Yeah.
right?
Yeah. No, I mean, to me, look, I am a big freedom advocate. Again, live free or die was the state I was born in, New Hampshire. So I'm all about freedom. But to me, it's not just, freedom of speech, and it's also freedom to live your life, right? The way you feel comfortable. But, the reality is you need money to do it. And so you've got to be thoughtful. You got to be strategic. And this is what's interesting to me because this is where you guys kind of come in. And it's not the traditional REIT investment. You're giving sort of, I would say this is kind of like a full service operation in
So
terms of being
you're
able to look at,
absolutely
yeah.
right. It's very different than a REIT. With Key City Capital, you get what is we call direct ownership in a real estate portfolio without the headaches of ownership, where you don't have people calling you for maintenance repairs and things like that. So you are a fractional owner of every asset in the fund, and you get all of the tax benefits that come with ownership of real estate. So although you get a preferred rate of return, say 8% per annum, and maybe a split on earnings and gains at 80%, during the early years of the fund, you're going to get a share of depreciation, which is engineered by our tax planning team to fully offset the preferred rate of return and the share of operating profits that you receive. So for someone that has high active income, why pay dollars on investment income you don't need to live off of? So real estate gives you that ability to shelter income from taxation currently. And that's how we engineer our funds.
Now, look, I mean, you're preaching to the choir a little bit on the real estate thing. I mean, I just think that, dollar cost averaging into the markets, into various different kinds of investments. People have heard me talk about precious metals, for example, or just a diversified base of, equities that you like and that you think over time are going to be advantageous to you, as well as precious metals. But I've also made the point on real estate, because it's one of those things that, over time, and I don't care, like, I know that everything goes through ups and downs. And I remember, dark days in Florida real estate, right? Where
Yeah.
they couldn't give the stuff away on South Beach. Well, think of how lucky the people are that bought then. Over time, and if you have that time horizon, it's one of those investment assets that really does perform. But what you're helping, I think, people do here is, it's one thing if I go out and, buy a condo in South Beach myself and then try and rent it out and deal with the ups and downs in the market. You're helping to kind of get rid of some of that up and down plus the headache, right? Because it is a portfolio that's diversified in different states and different places. And so you kind of shield people from some of the, extremes perhaps in some markets, and then also just the reality of having the headache of managing a property, which, listen, I've had vacation properties and I'm like, oh my gosh, it's not easy. Just whether you rent it out or not, just having more than one place is more headache.
Yes. So what we're finding is a tremendous amount of opportunity in the multifamily space,
Mm-hmm.
typically with properties that have 500 or more doors.
Mm-hmm.
There's less competition from the smaller investors, and there's more off-market opportunities. And it takes a fairly strong balance sheet to
Mm-hmm.
be able to acquire, say, a $100 million asset, which we did about 6 months ago. And the states in which we're operating, as you said, there's a lot of runway left in these economies. And it's not just people moving here, it's companies relocating to these more favorable tax jurisdictions. And when you have a major corporation, say, move to South Lake, Texas, or to Alabama or Tennessee, there's 3 to 4 to 5 years of infrastructure that gets built around that move. And so you have jobs moving here, people moving here. And it's not just taxation, it's safety and security as well. Think about the riots in Chicago. I had a client that was literally in a penthouse, FaceTime me, and had people breaking into some of the stores downstairs. Literally 3 days later, he vacated his penthouse, moved to Tennessee. And we're seeing this across the nation in these markets where we're defunding the police, high tax states. And now in California, we might have an exit tax.
Oh, it's unbelievable.
Un-
Unbelievable. I mean, to me, in America, you should not have an exit tax anywhere. We have one actually in America. If you want to, renounce your citizenship and move, the government does take, I believe, about half of all that you own, to try and disincentivize that. You can check in, but you can't check out. Anyway, look, if people want to know more, I mean, for one thing, they can go to keycitycapital.com/Trish, and I know you're gonna help them out. My listeners and my viewers are always looking for ways to protect what they have, to grow what they have in a conservative way. I mean, I don't think anybody's out there, well, I got some people that love Bitcoin, by the way, and I actually like Bitcoin. I've followed it forever. But, it's not that people want to embrace all this volatility. I think they're looking for some consistency, and that's what you guys are trying to offer. How do they get involved in a fund like this?
Well, the best thing is to go through a planning process where we have an opportunity to do two things. One is we can look at the prior year tax returns and recover what I call low hanging fruit, where we can implement suggestions that actually save you money on your taxes. And we can take those dollars and compound them into an investment program. Secondarily, we want to look at how can we improve investment performance and how can we prepare you for the next market cycle? How can we prepare you for inflation? And it really revolves around auditing each individual investment in your portfolio and using what I call the Morningstar institutional tools, where we can benchmark each investment against that class of investment and give you a report card or a scorecard. And that will give you the basis to make intelligent decisions about how you should be allocating your capital, and maybe allocating capital to some of the things that we sponsor that I believe are going to be excellent investment choices for the next cycle.
Very, very good. Well, it's a new year, new opportunities to think and
Yeah.
plan and figure out your future. So I encourage
It's
people
like
to
the
take a
wealth
good
workout, right?
yeah, good look at what you guys are doing. And I appreciate all your time today. We look forward to having you back because there's a lot of economic stuff and a lot of market stuff and a lot of real estate stuff that we've got to talk about this year. So
Yeah.
Charlie, thank you so much for your time.
Thank you as well, Trish. It was a pleasure being here.
So great. And just a reminder, everybody, you can go to keycitycapital.com/Trish for more information and maybe even talk to Charlie directly. Thanks again, Charlie. See, it's really important right now to protect your wealth for your future. So I just, again, want to quickly remind you not to forget to subscribe to Locals, because I'm going to be there tomorrow. That would be Friday at 4 p.m. Eastern, Friday at 4 p.m. at trishregan.locals.com. You can ask me questions. We can talk. I'm curious to hear your thoughts on everything that's happening right now, from Ukraine to the economy to the border, and much, much more. Inflation, of course, which you know is a big, big concern of mine and has been for some time. So tune in tomorrow. Be part of this community, this growing community. It would mean a lot to me. I'll see you there, 4 p.m. Eastern on Friday.